Hey everyone, Emeka here. How's it going? In this video, I want to talk to you, all of you who have never ran your own business before, and just give you some little tips, some of my personal experience on the things you need to start thinking about, taking care of, and taking action on now that will make tax time much easier for you. All right, so let's dive into it. Now, first off, I'm not an accountant. Thank God for that. I'm not a bookkeeper. I pay people to do stuff like that. But I have been an independent contractor. I guess you would call that sole proprietorship in Canada, and it's different terminology. So forgive me if I say something and it's not the same in your country. It'll be similar. But I have worked for myself for the last 12 years. What that means is I have not been, and I have not received a T4, that would be a 1099 for you Americans, for the last 12 years. I've received what's called a T4A, no idea what that is equivalent to in America. But meaning I have to be responsible for saving and paying my own taxes and reporting my earnings and all of that to the government myself. When you're an employee, taxes get taken off your paychecks automatically. And that's not the case when you are a business owner, when you're running your own business. So when Amazon sends you whatever the equivalent of your T4 or whatever it's going to be for you in your country, they're going to send the earnings that you've generated, and you need to report that to whatever your government is. Taxes are not taken off that, so you need to be saving for taxes at the end of the year. So like I said, I'm going to give you my tips and what I've done for myself. Of course, this is going to vary from country to country. So you need to go find an accountant. I'll give you some pointers on that. You need to get a good bookkeeper, and you need to set yourself up right so you can get this taken care of the proper and just the most efficient and effective way for your specific location. Canadians out there, how's it going? If you have any questions, I could definitely connect with you via Facebook or in the comments section below is probably even better, and give you a little bit more advice. But anyone else, you definitely want to make sure you're checking with somebody based in your own location. So let's dive into it. Very first thing is you want to make sure you go get a good accountant. An accountant will save you money, time, headache, and everything. You're running a business, so things get a lot more complicated versus when you're just punching a clock at Tim Hortons or McDonald's for an example. You need to go and interview several accountants and decide to work with the one that's the best. That's what I'm doing this coming January, That's what I'm doing this coming summer. I'm going back to Vancouver, and I'm going to be interviewing several accountants. And when I say interviewing, I mean exactly that. I'm going to pick the best damn accountant I can find and really afford to take care of my business. I've gone through it all. I've been audited. I've gone through really bad accountants, and I found some good accountants, but I'm looking for accountants that are specifically experienced in earning income from different countries, earning income from online, having somebody generate their own income off no other platform, purely just from my own personal blog. So I want somebody who's very experienced on the type of business that I'm doing, and I've reached out to acquaintances and friends of mine, and I think about 5 or 6 accountants right now that I'm going to be setting up and going into their offices, sitting down, drilling them, and asking them questions and getting their advice and see how I vibe with them and how they vibe with me, and I'll pick the very best one to work with. It's just so key, because when as your business grows and things get more complicated, you want to make sure you have an accountant who has your back, who will go and to the CRA for us, the Canada Revenue Agency, or the IRS for my American friends. you want somebody who goes and will fight for you. I don't deal with the CRA. My accountant talks to the CRA on my behalf. I don't want to have to talk to those guys. My accountant will fight for me, and that's one of the benefits of, or that's one of the things that make a great accountants great, is they will take care of everything because they know their way around. They know all the rules and the laws and all of that. So make sure you find a good accountant. Even if you're not making a ton of money yet, just have one on standby. So as soon as you've hit the income threshold that you think, all right, it's time to start, dealing with one, you have them lined up, because they save you a ton of time, money, and just overall give you more peace of mind. A bookkeeper is the second thing. Now, currently I'm still doing all my own bookkeeping, and what's the difference is accountants deal with your end of your taxes and all of that, where a bookkeeper, well, they would send you reports, for example, quarterly or monthly, of all your income, all your expenses, and all of that, all categorized. And then at the end of the year, you simply give that to your accountant, and they file it off. So they are separate. I'll also be looking for a bookkeeper when I go back to Vancouver in a few months here. But those are two business expenses you don't really cheap out on. Just having somebody to help take care of that and whatnot makes life so much easier and stress-free. So that's those two things are definitely key. All right, so let's move on. Let's talk about saving for taxes. So as I said, taxes are not taken off your paychecks. And so once again, I can only speak from my experience. I didn't see any deductions off my Amazon stuff for 2016. So what that means is you need to think ahead for what you're going to owe in taxes. Now you might be thinking, oh, I don't want to owe in taxes. No, that's stupid employee mindsets. Like, the more money you make, the more you're going to pay in taxes. The fact that you have to pay a lot in taxes means you're earning a lot of money. Now, of course, there are ways around it versus, once you're incorporated, you end up paying a lot less in taxes. Once again, depending on where you live, BC and Canada, they treat small businesses right. So what I do right now is I just take 30% of what I earn and I throw it into my tax, I call it my tax savings account. It's a savings account with my bank that I don't even have a card for. The only way to access that money is to go online and transfer it into a different account that I have a card to, or to go to the bank. And I do that on purpose, because then there's zero temptation for me to spend that money, because that's not my money. That's government money. Now I take 30% off. Like, so for example, if I make 10 grand one month, I take 30% off right away before anything else gets paid. 30%, 3 grand gets sent directly into that savings account, and that gives me 7 grand to do with what I please. Now, is 30% high? Yes, it is. The reason I choose to do it higher is so at the end of the year, when I have to write a check and pay my taxes, I have quite a bit more money left in that account than what I essentially I'm gonna owe. And I do that on purpose, just to set myself up the right way, because I'd rather overestimate on what I'm gonna pay for taxes than underestimate. And at the end of the year, if I have, let's say I have 50 grand stuffed in that account, and I owe like 30 grand or so, I'm just making up numbers, then that's an extra 20 grand that I've just saved. And I can use that to fuel the business. I can invest it. I can do whatever I want with it. That would essentially be my return. So hopefully that makes sense. So do whatever percentage you're comfortable with. I chose to do it off my income before expenses. I know some people say, well, you can do it off your income after expenses. I just like playing it safe. So if I like saving money. Okay, so if I can save a bit more and take that 30% before expenses and tuck it away, then versus after expenses, well, whatever. So bottom line is you need to be saving something for your taxes for the end of the year. All right, so let's talk about accounts. I have separate accounts for different things, and I set myself up like this for specific reasons. So I have my main, now caveat, all of these accounts are actual personal accounts with the banks. I don't have any actual business accounts with the bank. The difference is personal accounts are cheap. Business accounts can run you fees like 100, 150 bucks a month, at least in Canada with most of the banks there. So all of these are personal accounts. I just call them my business accounts because they're not the same accounts that I would buy my groceries with. They're just my personal business accounts. So stay with me on my terminology. So I have, I guess, okay, I'll just tell you names because it'll make sense. So our personal money is with our Scotiabank accounts. My business is all run out of my RBC accounts. And so with my RBC accounts, I have my US bank accounts and I have my checking account. That's the account that I pay for courses, I pay for whatever. That's the account that all the money, flows in and out of. I also have a business savings account, okay? And I have that. I just have certain streams of my revenue going into that account versus the other account. I just like having them separate. And then, like I said, I have it's way over here, so I can't touch it. Even off screen is where I take my money and put into my taxes every single month at the beginning of the month. Okay, so I have like those three main accounts that are all linked for my business, completely separate from my personal bank accounts and with the wife and all of that, completely separate because this is the business income. This money is only spent on the business. When I pay myself, when eventually as we generate more revenue, we start paying ourselves, because you call it a salary or whatever it is, I will pay myself from the business account, transfer it over to our personal account, and then that would essentially be like my paycheck for the month or whatnot. So it's so key that you have them separate because then it allows you to track your expenses, just track your income, and you don't end up spending your business money on stupid, it's just, that's your business money. That needs to go, go back into the business, fuel the business so it grows the business. And then down the road, you have even more money that you're able to, go out and buy all that stuff that you want to buy. But in the beginning, you need to make sure that you're just using the money that's coming in to further fuel the business. All right, so let's talk about receipts. Now, you need to be tracking all of your expenses that are business related, because the reason is at the end of the year you need to write these business expenses off to lower the amount of taxes you're going to pay. So for what I do for this, I'm actually gonna film a separate video and show you guys on my computer how I categorize everything and keep track of everything on my computer, because I think that'll just be a bit more valuable to you than actually explaining it. But I'm just going to kind of give you a brief overview of what I do right now. You need to keep all of your receipts for anything you're spending your business, anything that you spend money on that you can prove is going to directly reflect your income for your business, you're able to write off. Once again, I'm only speaking from my Canadian experience. You have to confirm everything with your own government. So, for example, when I bought, like my AWeber monthly subscription, 19 bucks, that's a business write-off for me because I use it for my business. ClickFunnels is a business write-off. When you when you are buying your books, right, when you spend $200 on a book, that is a $200 write-off that you need to be expensing at the end of the year. The reason you do this is, let's say you've made $50,000 in the year and you have $20,000 in expenses, books, VA fees, promotion, all of that is 20 grand. Once again, the Canadian government doesn't tax you on 50. They minus the 20 of your expenses, and what's left is $30,000. They only tax you on $30,000. So what happens is you end up going into a smaller tax bracket. Okay? So you just got to see how does this work in your country. Once again, I'm going to keep saying that over and over again just because it can be so different. I think even in the States, you guys have it where you pay taxes on, like, the tax rate's different per state and things like that. So it's really, I'm just trying to give everyone the best generalized information so you can just think about these things, because it's important, especially if, like I have lots of experience in this, but I'm guessing a lot of you're new, right? You don't have a ton of experience in this. So these are just the things that you need to start learning and thinking about. And from my experience, by doing all this in the beginning, when your business is small, it's so much easier to handle and grow it as your business is big. If you try doing this when your business is large and complicated and there's a lot going on, it's a mess. It'll cost you more money. It'll cost you more time. And you just want to start this in the beginning. So be sure to check out the additional video I'll have where I'll show you how I organize all my receipts and everything straight on my computer. And I even use this, I'll give it away as a free download, this document that I use to keep track of everything as well. So I'll have a link to that video in the description as soon as that video goes live. So those are just some things that you want to think of and just keep top of mind. Having a good accountant, finding a good bookkeeper, keeping track of all of your receipts. Even on that note, let me add this in really quick here. And sorry if it's kind of jumbled, but like, for example, a good accountant, one thing he taught me is my wife and I, we both have separate cell phones. My cell phone, it's costs a lot more than my wife's. So what I did with my cell phone is I simply, because you can't write it off 100% because they're not being used 100% on the business. So what I did is I switched both cell phones in my name, but then one I put into my business's name, the higher monthly cost one. So now the higher monthly cost one is a 100% business write-off. And this one was now mine and my wife's personal cell phone. So there's different things like that that you can do to increase your monthly write-offs or your expenses and things like that. So that's why having a good accountant is just so key. So once again, get a good accountant, a good bookkeeper, keep track of all of your receipts. I'll get the video to show you guys how to do that. And what were my other tips there? Save for your taxes. Just save a percentage of what you're making every month for taxes, and get your bank system set up so you have multiple accounts, so your money's just not all in one place. It's spread out and you're able to keep track of it a lot easier. Hopefully this helped. If you have any questions, I'll do my best to answer them. I'm not gonna, if you tell me, oh, well, is this a write-off or whatnot, I'll give you my advice. But once again, you have to go talk to a professional accountant in your area, in your country, to really make sure that you're setting yourself up right and doing the absolute best you can to increase your profits and to lower your expenses and lower your taxes at the end of the year. It's just one of the joys of being a internet entrepreneur or a business owner. That's essentially what you are. So yeah, anyways guys, I'm Emeka. If you haven't got my free guide yet, check it out. It's mekossai.com/theblueprint. It's my 5-step blueprint to making your first $1,000 online with Kindle publishing. Link in the description for that below. As always, if you're new to the channel, take a look around. Nice to meet you. Make sure you shout out to me, and I can't wait to talk to you guys later. Take care.